All right, welcome back to our third episode of our Mitten Mortgage Lending Podcast. Still searching for a name at the moment, but yeah, we wanted to cover some things today. We have obviously our loan of the month that we're going to cover. We're going to talk about FHA, conventional, VA, kind of the speed that goes with those, and then also our market update. But first thing we want to touch on is a cool, I don't even know if you can call it a loan product, but a loan service that's available, recasting. Chris, why don't you tell us a little bit about the recasting?
Yeah, it's hard to call it a loan product because it kind of comes with the loan product when you get it. It's more of something after the fact, after the loan. But to touch on recasting, it's such an awesome tool that I'm not going to say everybody could or should use, but a lot of people could benefit from, especially nowadays. The market's heating up, it's getting competitive, especially coming into spring, summertime here. And you've got a lot of people who don't want to place an offer on a new home and make it contingent on the sale of their home. They've got the money, or maybe they have the money in their 401k that they're willing to leverage, or they've got a HELOC, whatever the case is, they have the money for the down payment, but they don't want to sell their house first.
Yeah, and I've had a lot of clients where when I explain to them what the recast is and why they should use it, they're like, this thing's awesome. You guys should tell everybody about this. So what exactly is it?
Yeah, and we're having the conversation a lot more these days. So all it is it's a great tool that what it does is it re-amortizes your loan. So when we say re-amortize, we mean recalculate based on the period of time that you have left. So let's give a little bit of an example that'll make sense for everybody. You go buy a house for $300,000 and you put $50,000 down. So you're borrowing $250,000. And you're not selling your house yet. You're sitting on your house. Maybe it's your starter house. You have a ton of equity in it. You've lived there for a long time. You've already spoken to your agent about it, and you know when you sell that house, you're going to put $100,000 in your pocket. But you don't want to wait to sell that house, and you don't want to go make offers in a competitive market that's contingent on the sale of your house. You just want to go buy a house, take your time, move out of the other one, move into the new one, and then sell after. So what the recast does is that person who borrowed $250,000 right now at purchase, if they sell their house, let's say 2 months, 3 months, 6 months down the road, whenever they sell their house, and they're sitting on a lump sum of money, we're going to use $100,000 in this example, they can take that money, put it down on their current mortgage, make a large lump sum payment of capital towards their current mortgage, and their lender, their servicer, will recalculate their mortgage payment based on how much time is left on the mortgage. So they're not resetting you like you do in a refi. You're not going back to 30 years.
Right, you're not paying the extra cost of that, too.
Yeah, and you're not, all those other things, too. You're not paying closing costs. You're not doing all that. But all they'll do is they'll reset or they won't reset. They will re-amortize your payment based on how much you owe now. So, for example, this example we said, you borrow in $250,000. You just cleared $100,000 from the sale of your house 6 months later. You want to go take all $100,000 and put it down. You can take that $100,000, apply it to your balance. So your mortgage that had a $250,000 balance,
around $150,000.
You're going to be down around $150,000, probably less because you've been making payments this whole time too. But you're going to be down to $150,000. And let's say this took a year. By the time you moved out, sold your house, made everything, this took a year. So you now have 29 years left on your mortgage. That lender is going to recalculate your payment and say, okay, you've got 29 years left. You only owe $150,000 now. Your new payment on this $150,000 at the rate your mortgage is already at, you now owe this much per month. So they're going to recalculate it, and obviously the difference in a $150,000 mortgage and a $250,000 mortgage is going to be drastic. So it's a way to drop your payment and use the money that you have after the sale of your home without having to worry about anything in the meantime.
Yeah, and a lot of clients that we see are using it. You know, they have the ability to buy. You know, you still got to be approved with having that other mortgage on there. So if we can get you approved with hanging on to your current mortgage, what we're able to do is basically you can go in, you can put the minimum you need to down to get the home, to get that loan. And then once you sell that home that you're currently living in, take that lump sum and put it down, which is huge for people's payment because a lot of people say, you know, they might be in their starter home and they're moving on to their next home, or they're in a home where they're going to go buy their forever home. So when they purchase that, if they purchase it and their loan amount is $400,000, $500,000, that's going to come with a huge payment, you know, $4,000 payment that they don't want. They might budget for a payment of $2,500. But right now, with everything being so competitive, it's very hard to get an offer accepted if it's also contingent upon the sale of your home. So this is a way where you can go buy that forever home, and then once you purchase it, sell the old home, take that money, put it down. So now we don't have that $4,000 payment. Now it's, you know, $2,500. which is what you budgeted for. So it's a way to do that, and really, as long as we can get you approved with having both mortgages, and as long as you still have the funds necessary to put that minimum payment, which we've seen people take gifts from it, we've seen people borrow from 401ks to get it, and then either pay that money, that gift back to mom, dad, uncle, aunt, whoever, or recoup that money and put it back into their 401k. And then it's none the wiser. Everything's the same as it would have been if you'd have put that huge chunk down when you actually bought it.
Yep, and that's much more common what we see. Someone doing a minimum down payment, get in the house, hey, I'm going to use the money I have right now, I'm going to put it down, we're going to get in. As soon as I sell this thing, I'm sitting on a boatload of equity, we're going to pay it down. We can make a high mortgage payment for 2 months, 3 months, 4 months. As long as you're prepped for it and you know what's coming. Of course, we got to get you approved, but as long as you're available, you're ready for it and you're willing to do it, you take that higher payment for 1 month, 2 months, 3 months, 6 months, however long it may be. As soon as you get it, you recast. Recasting is cheap. Refinancing is cheap too.
Yeah.
I mean, refinancing, is very cheap, but recasting is very cheap. You're not paying a title company. You're not paying for an appraisal. You're not paying really for underwriting. You're not paying for anything.
It's right around like $200.
Yeah, it's a one-time fee. It depends on your lender, so you always
Yeah.
have to call your servicer. You got to see what their policy is at the time. Mortgages get sold. You get new servicers. They're almost always going to be available though. Typically 150. $300 maybe tops. Usually they make your big lump sum. It's usually got to be at least $5,000. Different lenders will have different criteria, but really pretty simple. You fill out a form, you go through the servicing department, you submit it, they review it all, you make your lump sum payment, they recalculate, and now your mortgage payment's lower.
Yeah, and you're on your way. And so that's available for conventional loans, none of the government loans, and with that as well, like you said, $200, $300 fee, that's all you're paying for it, and you're filling out a form and sending in a big lump sum check. So definitely something to take advantage of is the Recast. Like I said, I've had a lot of people ask me about it after they use it, saying this product's fantastic.
Yeah, and it's not always the way to go. I mean, if rates are trending down, if you're someone who's thinking about doing this, and in 6 months rates are significantly lower than they are right now, then maybe it is worth refinancing you, because we are going to you can bring that lump sum to our refinance. We can pay your balance down, and we can get you a better rate too. But either way, it's a phenomenal tool that should definitely be explored, especially if you're somebody that has enough money to buy another house, but you don't want to make offers contingent. I mean, absolutely something that should be looked into. Awesome tool. We see a lot of people use.
Yeah, I think it helps to sell your home too, because that way you're not in a rush. You're not like, okay, I just have to dump this thing because I got to get the money I need to buy my new home. So I have to rush, and you can also take your time with selling your home and get the terms that you want on the sale of your home, get the price you want for the sale of your home.
I'm glad you mentioned that. There's been so many people that we've talked to that have said, hey, by this Recast, it allowed me to move out, clean out my house, fix a couple things, repaint, get the curb appeal back up, do whatever I need to do to my house. And my house ended up selling for $20,000 more than we thought it was going to, because I didn't have to sell it while it was full of kids' toys, dogs' toys, animal, whatever.
Yeah.
I got to get out. We got to make the house look super pretty, and I mean the listing agents will love it too, because there's no rush.
And then again, you're not contingent upon the sale of your home, so it's not like I have to take whatever offer just rolls in that gets me enough where I can buy the new home I got to take. You can take your time with it and make more dollars for yourself as well.
Absolutely. I think it's also important to mention too, we kind of framed this around buying and selling and doing all that. There's a million different reasons someone might want to recast.
Yeah.
Someone comes into a lump sum of money. Unfortunately, death happens in the family. People come into money. Whatever may happen, you get a lump sum from something. You get a settlement that you weren't expecting, and you really want to put that money to work. You want to get rid of your mortgage balance. You want to do something like that. You can still recast. It's not like it has to be contingent on the sale or anything. You can recast your loan on a conventional loan as long as you
can do it more than once.
You can do it as many times as you want to. I know coming into the buying season here, a lot of people will be using it. We've already talked about it a lot, but definitely something that's not really out there and not really known. Most mortgage companies would rather tell you refinance. Call us and refinance. And don't get me wrong, if it's the right decision, we are going to refinance you. But if it's not the right decision, let's not worry about refinancing. You save that money, recast, and now your payment's lower, and you didn't have to spend a couple $1,000s on the cost of refinancing.
Yeah. So if you got more questions about recasting, reach out to us here at Mitten Mortgage Lending. We're going to take a quick break, and then we'll be back with another banker of ours. Sharnal Naldi is going to join us for his loan of the month, which he had. VA loan, huge pricing adjustments that happened with this one. Huge savings for the client. So we'll be right back after this break. All right, so we're back with another banker here at Mitten Mortgage Lending, Sean Ronaldi, and he's going to have the loan of the month. So, Sean, take it away with how that loan went.
Yeah, absolutely. So this was a loan that we worked on for quite a few days before we got the the client's commitment. They were shopping local lenders, and at the end of the day, we walked through numerous comparisons. That comes from different interest rate, different costs, etc. Right? Just make a long story short, as far as how it went, we closed well ahead of time, but I really wanted to show the savings that we were able to provide to her just through some of the different loan quotes. Right? So. The first one I start with is that, just because she was being offered, let's say, a 5.75 from a local lender, we were still offering a 5.75. Most folks will look at that and say, oh, right on par, same rate, no big deal. I'm going to stay with my guy. I'm going to stay with my girl, right? So I said, well, why don't you send me, the loan estimate? Let's just take a look at it together. It never hurts to get a second opinion. And as we look through it, the same 5.75 that we were giving her compared to the local lender was $4,000 cheaper. $4,000. Now, mind you, this is a client that was looking to hopefully have some monies left over so that way she could buy a fridge. They did not have appliances. This was a new construction home, right? So she needed money. So we go through the first comparison. Obviously, goes without saying that she loved the fact that she'd get the same rate with us. Beating out that local lender, saving her $4,000, same payment, same everything, right? So then she ends up having another quote, right? This is a 5.375, and I'm like, well, geez, that looks fantastic.
And this is the one here we can put on the screen to show everybody at home what that looked like in the comparison with the competitors. First page of the loan estimate on the left, and then RGC on the right, which obviously you can see the difference in payments, $246, and the difference in that rate that they originally showed compared to our rate. But
yeah, I mean, shoot, you show me that, and that's all you show me, which this is the MO, unfortunately, of our industry. If you're not working with somebody you trust, somebody that knows the area, that's local, right, that really is invested in you as a client, right, not just the bank, as they say, right? If you were looking at just this first page, you say, well, I'd be an idiot to take,
right,
the 6.249 versus the 5.375.
But the next thing they got to check out is what we're going to show now on screen,
yes.
which is the costs of that 5.375.
What rate are you getting, and how much does it cost?
Yes, because that's a big part. Everyone just wants to know about that rate.
Yeah,
really, the whole other side of that is, what does that rate cost?
Yeah,
because there is a price to it.
And we'll have a whole other segment on this one day. I don't want to hijack Sean's segment here, but that's so important. The rate you're getting, of course, matters. But probably more important than the rate you're getting is how much does the rate cost?
And 90% of the people out there just think rate.
That's all rate.
Nothing else.
They hear low rate, send it.
You got to ask the cost of it. So
it ended up being an easier decision for us, right? But so as you see on the second page here, and we put up the statistics, right? Like, yeah, saving 240, 246 or whatever it ends up being, that's fantastic. I want those savings too, right? But not at a cost of $21,000. I mean, and I look at it this way, and this is the easiest way to sum up. What is more valuable to you right now, today, right? Like, so would me saving you $250 a month today be more beneficial than me giving you $21,000 to start with? And like we all know this answer, right? And
you buy a lot of fridges with $21,000.
yeah. She could buy a fridge.
Fridges are expensive, I know, but you could buy a lot of fridges with $21,000.
So needless to say, the other thing that we had to explain is something that we all cover with our clients, which is we're in a prevailing interest rate market, or that at least that's where our projections are by the time that this client will be eligible to do a refinance, right? So why pay for a 30-rate security $21,000, right, when you're only going to use 2 years of it, right? Like, shoot, 2 years from now, I could be, we would be writing that same mortgage. We could be writing a 5.375 for $0.
Yeah, and that's what people need.
I was saying, for the people at home, yeah, so Sean's saying, hey, are you going to spend $21,000 on your loan to save $250 per month?
Yeah,
and I mean, what's the break?
It's
a 6 or 7.
If you're paying $20,000 and you're saving $250 a month, you recoup your money after 80 months. So after 6.5 years,
plus. 6.5 years.
So you're not going to. And the other thing is, you're not going to be in this loan for 6.5 years. You are going to move, refinance, do other things. So it's not a smart financial decision to get that super low interest rate that costs you $20,000. Sometimes it's okay to buy a little bit of points, but when we talk to clients, I know we normally want to stay within kind of 2 years or below, if that at all, right now.
Especially right now.
Because we know that refi season should be coming around when these rates do drop.
Yeah. Pretty much every loan that's getting written now or within the past year is going to be refinanced at some point, probably within the next year.
Yeah.
For sure. I
Back to
always
your story. Sorry.
No, no worries. Like I always tell my clients, it's more important for me to understand your goals, right? Like if I'm coming out to any of your clients, or if you're working with somebody who really is literally just advertising my rate, my rate, right? Like this is proof positive that this particular client could have been, for lack of better terms, swindled by a local lender for 20 grand, right? When really just understanding the goals was not so much the payment. Can you save me money? What can I have left to get those
Yeah,
appliances?
furnish a brand new house.
They were taking a trip to Japan.
They were going to Japan. They were going to Japan.
You paid for it with the savings.
Yeah, actually, it was funny. We talked about that. So she ends up closing, right? And here's the best part, right? We priced out our mortgage for that particular client to get $1,500 back. We really pride ourselves here, and like we're not going to show you the best case scenario up front.
So when you sent her initial docs, she thought she was getting $1,500 back at closing.
Yes, right. So, and I said, listen, like this is a commitment that we would love to earn your business. That's why we're putting everything in front of you straight up front with everything spelled out, right? And I said, I can assure you this, like I'm going to use a worst case scenario first approach, because if I call you at the end of this process, right, and I say, hey, by the way, you're getting more money back, you're going to be extremely happy. And
I've never had anyone get mad at me for that.
no.
One. Yeah.
No, so lo and behold, she actually ended up getting over $3,000 back, right? So she is getting the fridge. She was extremely happy. And I would say the craziest part about the whole thing is that you think of all these moving parts. It's a VA client, right? They're buying a new home from a relocation, right? You have to get employers involved. That was brand new, right? So there's a lot of moving parts. But from start to finish, and kudos to our processing, right? We got everything up front before we issued a pre-approval. So when the process started on conditional approval, that client e-signed 2 documents, never sent us a single document beyond that point, right? She actually called and was like, is everything, like, it seems too good to be true, this is too smooth, and like, we enjoy those calls, it's okay.
I got one of those right now. They're like, we're just waiting for stuff to hit the fan here. I'm like, I think we're going to be fine.
Yes. So 18-day clear to close, right, on VA with all these moving parts, right?
VA new construction.
It was new construction, right? So if any of you are familiar with VA new construction, it is a document intensive loan program, right? But we made it super simple on our client. 2 e-signs and a close is almost unheard of. So
Yeah. Was it under?
Under promise, over deliver.
There you go.
Yes.
Under promise, over deliver. Something we do a lot
Something
over here.
we live by here.
Yeah. So that moves us right into our next topic, which is talking about that speed and efficiency.
Yeah.
When we compare FHA loans, VA loans, and conventional. And we always talk about that there is we think a big misconception out there that obviously conventional loan, it's best for the clients, it's the easiest process, but it is, as far as speed goes, really to us, all 3 of those work the same. The VA and the FHA, the appraisal is a little more strenuous, but if you're FHA for like $400,000 and you're buying a home that's in very good shape, probably for that price point, you can expect to close that within the same speed you would as a conventional. And I mean, that's really, again, we want listing agents to know that, because you don't need to be scared off by these, thinking that these FHA loans or VA loans are going to take 30, 35, 45 days. We're still getting FHA, VA clear to closes in 10 days or less. We're still getting them in 12 days, things like that. Very similar to conventional. There's no extra hoops we're really jumping through.
Yes. So our average closing times in mortgage lending, that's all encompassing. That's FHA, that's VA, that's conventional. It really doesn't matter what kind of loan you're doing. If it's FHA, VA, or conventional, I know agents get scared of FHA and VA because they're government loans. I also know that there's a lot of bad LOs out there who kind of spread misinformation, and they're really slow or they're really lazy, so they'll like to say, we're waiting on the VA, we're waiting on the FHA. No, you're not. You're waiting on you, or you're waiting on your underwriters. There is nothing that we're waiting on from these places. Yes, we have to order the appraisal through the FHA or through the VA, but you're waiting on the appraiser at that point,
Yeah.
or you're waiting on your underwriting. There's nothing else that we're waiting on. These loans all move at the same exact speed.
Yeah.
Especially because, like Sean mentioned, we vet everything up front. We gather docs up front. We gather, we submit stuff to underwriting. We do income calcs ahead of time. There's nothing else that we're waiting on. Now, is there going to be the occasional house that can't be financed FHA or VA? Yeah. There's going to be some peeling paint. There's going to be a rotted deck. There's going to be there's going to be some really bad concrete at a house. Okay, for that home, it's not going to work. We can't do FHA or VA. Unfortunately, we don't get to see these homes, so we kind of rely on the agents to be our eyes out there, tell us if they see something, or tell us if they're curious about something. Take a bunch of pictures of it and call us and let us know. I can't promise you what the appraiser is or isn't going to say, but through years of seeing these come through, we have a pretty darn good idea of what they flag and what they don't. And there's just no reason that the process is every bit as smooth, the closing is every bit as smooth. There's no reason to be scared of these loans. We close them just as fast, sometimes faster than that.
Yeah, and I mean, there are the occasional where like, hey, we got to get a bankruptcy doc or something else that may pop up with an FHA that may slow us down. But right now, especially, you can get better pricing FHA if your FICO is like 650, 660, 670. So a lot of times that we might be going FHA just because it's convenient for the pricing for the client, not because we're going to be slowed down by anything like a bankruptcy or something like that, which again, those things do pop up that might take a little bit of extra time, but it shouldn't reach that 30, 35 day mark. Like that should be unheard of still.
No, we're not
talking about extra like 3-4 days.
We're not locking a loan for longer than 30 days. So unless we need to, unless there's a 45-day contract, or you guys have we have them, but we don't. I can't tell you the last time we had a lock longer than 30 days. We don't need 30 days on anything.
Yeah.
I mean, I always say for government loans, it's only a big deal if you make it a big deal. It's the easiest way to put it, right? Like if we're gonna make it a big deal, we're gonna make it a big deal because we can close it. Like we can do these things inside time frames, still conventional speed. So I always say only a big deal if you make it one.
Yeah, and again, we keep that smooth process going here like we do with a lot of our loans. But again, especially those higher end VA, FHA price points, again, if the houses are in good shape, there's really nothing to worry about as far as the speed and efficiency that we will still be able to close those loans in. So last thing as we're wrapping up here, going to Chris for our market update. Not much movement there, but
not much movement there. The up and the down, the up and the down. We've seen it here over the last couple of days, the last couple of weeks since the last time we chatted with y'all. We're still hovering. We're still below 7%. We're hovering around the 6.99 range. Maybe a little better, maybe a little worse. Depends on your credit score. Depends on your down payment. Generally speaking, though, we're still under 7. We got here the last time we talked about it, and then in between there, we did see them kind of climb back up. Since then, we've seen them come back down. Yeah. I'm sure this cycle will continue a little bit. We're kind of testing new lows until that line starts just moving down.
FHA, VA, I'm seeing those were like around 6.25.
Yeah,
6.25. You seeing the same thing, Sean?
Yes, yeah, absolutely. Potential to get a little bit lower again, like Chris said.
1% to 0.5% lower again, depending on credit, down payment, some of this other stuff. But yeah, definitely going to be low. Let's call it low 6s on the Govy loans.
Yeah. I got a client, FHA closing today actually. FHA rate and term refinanced on to 5.75, but that was kind of when they were testing that low, got a little low. We got it at the perfect time.
Matt caught them in the little valley.
We caught them in the valley, and
Matt timed the market right.
Yeah. We took advantage of that.
But that's where we're headed. That's the testing the new lows. Right now we're hovering back up higher, but over the next couple weeks as summer comes, even if we have to go through the summer where we're at, it's okay. But sometime soon, we should definitely see things.
And we're already getting a lot of clients that are reaching out, asking about refinancing. Is it time? I'm hearing rates are ticking down. A lot of people that bought, late summer last year, fall last year, they got those 7.5s. I'm hearing they're down. And I think we're getting close. We're still not there because every time I price those out, which is about once a week, we're still like that 6.99 is the best, which we want to move the needle more than that. And we think that they're going to be able to in the near future here. So yeah, definitely something we're checking on daily.
We're always watching. And I always tell everybody, anybody I work with, anybody I talk to, if you're curious, if you just want to know, you saw something on the news, you heard a radio ad today on your way in, some telemarketer called you and told you should refinance, call us. We'll tell you. We'll tell you the numbers. We'll help you decide if we think it's worth it or not. Right now, like Max said, most of them just aren't quite there. We're really close. A couple of them we could do. I've had a couple that I could do, and we could probably save them $75 to $100 a month. And we've talked about what the upside looks like when they come down, and the clients made the choice to wait, and that's fine. Like we're in no rush here. But if you are even thinking about it or even curious, call us.
The call's free.
The numbers.
It's a free mortgage consultation, right? Take advantage of it. At the end of the day, it doesn't cost you anything, and we're gonna, like Max said, he's had to tell a couple, hey, we got to wait, a month or two, just depending on your situation. But you might as well get the answer from an expert.
Yeah, we're not going to sell you 20 grand in points, so we can give you that 5.
We will not do that.
We're not going to do that. We're not
Unless you
do that.
really
Unless you're
want
insistent.
it.
No, we're going to make sure it makes good financial sense for you always. And then last thing to hit on UWM Live for our real estate partners
Super
out
excited.
there, people that want to attend the event, we're going to be sending out a mass email here coming up to a lot of the offices that we work with a sign up and how to participate in that. It's one of the biggest mortgage events in the calendar year in the mortgage industry, and especially around here out at Pontiac at the UWM campus. And our own Chris Sabonic's going to be on the panel speaking there, so definitely get out and try to see Chris there. I know he really wants to talk about that and highlight that portion of it.
Yeah, no, Mac knows I'm not good at talking about that, but it's going to be a great event. Every year, UWM Live is a great event. I go there and come home with pages of stuff to take home and bring back to the business. I think the same could be said for everybody else that goes there. Realtors, if you're in the industry, if you're not a realtor, I mean, even insurance, if you're in the industry, if you're interested, it's a great event. It's free. It's at UWM. We're so lucky. Largest mortgage lenders here in Michigan, here in our state. So take advantage of that. Great day of learning. Tons of good speakers. There's so many, not talking about me, but there are so many experts from the industry that are going to be there. There's going to be a ton of info on social media, stuff that you can do to build up your social media. So whether you're in mortgages or not, I mean, whether you're in real estate or not.
If you're in business.
If you're in some sort of business, I promise you there's something that you can come learn. Tons of great speakers, tons of good people going to be there, tons of good info. May 16th, and we'll have some more info. We'll even, we'll have a little link probably. Well, yeah, we will have a link for everyone to sign up.
QR code.
And if you have questions about it, let us know. But I'm sure you guys will see a lot more about that coming soon.
Yeah, Matt Ishbia, definitely one of the speakers. I think that if you're going out there that you want to hear, if you haven't heard him speak at UWM before, he is definitely somebody. When you talk about anybody from business is going to take something away from listening to Matt. That's definitely something that I would hit out there and try not to miss out on. You went last year too, didn't you, Sean?
I did. Last year was Tony Robbins, and that was
No Tony this year. He was back to back.
No Tony this year. He was back to back years. It was a blast, but that was a new experience for me. And I would say even aside of Tony, like you said, the social media stuff. I think going there, you think about all the things you can bring in, but really networking is huge, right? So you're a realtor, you're going to meet thousands of different realtors across state lines.
I think they had over 5,000 last year, and I know they're expecting another massive turnout.
Yeah, they're talking 6 to 8
so,
this year.
Yeah, so 6,000 to 8,000 projected for the year, and they've already got a boatload of people signed up. So, like Sean said, if you go there and you somehow learn nothing, which that'd be pretty impressive. But if you go there and you somehow learn nothing, you should still be able to network and plug into a couple people and meet a couple people. And there's also just no way you go there and learn nothing.
Yeah, no, there's too much. I'm gonna have a notebook special for UWM Live. So yeah.
And that's going to be an event coming up just in a few weeks here. So May 16th. Again, we're going to be sending out the sign up to offices, to agents that we work with. If you don't have signed up, if you want to attend it, reach out to us. We'll get you guys signed up and hope to see everyone out at UWM Live. Thanks for joining us for this month's episode of our Mitten Mortgage Lending Podcast. Still working on the name. Hopefully next time we'll have it for you. So from me, Chris, and Sean, see you guys later. Talk to you soon.